Today, in part 6 of our series on house hunting in the villages, we're going to talk about some of the costs you need to know about before you buy a house here.
We'll share what we've learned about the bond payment, CDD maintenance fees, and the amenity fee. Plus, we'll talk a little about taxes. We'll let you know where you can find all this information, and we'll post it in the description below.
First, please be advised that we are not experts in any way and are not giving any professional, financial, real estate, or legal advice. You should do your own research. This video is to help you learn about some of the hidden costs involved with buying a home here in the villages.
It's been a while since we've bought a house ourselves, and it's different here in Florida than in Ohio where we used to live. David and I both have a real estate background, so we know some of the mistakes buyers can make, like buying too much house and becoming house poor.
That's something that can easily happen here as people get swept up in the frenzy of home buying and wanting everything for their dream home. We don't want that to happen to you or to us.
We've taken our time doing research on the Florida market so we can find the right house in our budget and have plenty of money to do the things we want to do in retirement.
If you're new to our channel, we decided to sign what has turned out to be a 2-year lease and live here full time. Our journey in the villages started with a lifestyle visit in November of 2022.
We just weren't ready to buy at that time, and we had a lot of doubts and questions that needed to be answered before we could commit to buying a home here in the world's largest retirement community, the villages. We've made a 3-part video series about renting long-term here, where we share what the pros and cons are and how much of our costs are each month.
We'll link those in the description below and at the end of this video.
We also made videos about touring other 55+ communities like all 3 Latitude Margaritaville residential areas before we finally decided to buy here.
Yeah, they're really nice. This series is about searching for a new home here in the villages, and at this point in the buying process, we knew we needed to get pre-approved by a lender. So we went online to our regular bank, Chase, and to the local bank here, Citizens First Bank. We put our financial information like our income, assets, and monthly payments, such as credit cards and car loans, on their secure online websites. Now, everyone's financial situation is going to be different as far as purchasing a home. Some people have already sold a house in another state and are buying with all cash. Others are financing all or part of a new home. This video is more about the costs that are in addition to the primary mortgage payments for principal and interest.
Interestingly, the majority of homes in the villages are bought with cash. Citizens First Bank makes the majority of loans that are financed, and they are associated with the developer of the villages.
We wanted to be prepared, so we brought with us a spreadsheet of most of the information he needed to calculate the debt-to-income ratios.
One thing that amazed us to find out that lenders now will accept a debt-to-income ratio of up to 48%. Basically, the ratio is showing how much of your income can go towards debt. That is almost half. Not long ago, the common rule of thumb was that you should spend no more than 28% of your gross monthly income on housing and no more than 36% on all debts combined.
Our lender was able to give us several scenarios using different interest rates, points, and loan terms, and we left there with our pre-approval letter in hand. After our meeting, he sent us by email an itemized fee worksheet, which gave us a complete breakdown of all the costs, like the estimated reserve, homeowners insurance, real estate taxes, private mortgage insurance, the amenity fee, and the bond, along with estimated closing costs.
Because we were looking at new builds, the lender didn't know all of the exact costs. We needed to do our own research to find those estimates and update our lender to get more accurate worksheets.
For example, we contacted our insurance company to find out what homeowners insurance would cost, along with optional sinkhole insurance and flood insurance.
We also asked our village's sales associate to give us the exact bond amount, including the interest rate, and relayed that back to the lender.
You will need to call your local county tax office to learn more about what the real estate taxes will be on a new home build and especially about the homestead exemption, where you may be able to save money on your taxes. Make sure to find out when it needs to be filed and ways to qualify as well. What is the bond? The bond is the portion of the infrastructure costs to build the home and neighborhood. It is for the roads, sewers, street lights, and utilities. The total cost is then divided by all the homes in that section and as the bond portion. Each home in that section pays the same amount no matter how big or how small the home is in square footage. The key is, the newer the home, the higher the bond payment. All the bonds are paid with interest being charged over a 20 or 30-year period and are part of your real estate tax bill. A homeowner cannot pay down a bond. They only have the option to pay it off totally or pay it on their tax bill annually. To find all the detailed tax breakdowns, you can look it up in what's called a TRIM report, like this one. TRIM stands for Truth in Millage, and the notice is sent out each August.
To look up your TRIM report, you go to www.sumnerpa.com, the Sumner County Property Appraiser website, if your home is in Sumner County. The TRIM report tells you what they predict the value of your property is for the next year. You can review it online, and you can also appeal the assessment if you want to.
Understand though, if you're buying a new home, this information will not be online yet until it is recorded after your closing. There's a delay, so find out what these costs are before you buy so you don't have any surprises.
You pay the bond right along with the other taxes like county taxes, school taxes, rescue and fire, and the village's Community Development District or CDD maintenance fees, which will most likely increase at some time in the future.
You can have your taxes escrowed into your monthly payment by your lender to make it easier to pay. Or you can save money by paying it yourself at the county tax collector's office. The villages is spread out over 3 counties, Sumter, Lake, and Marion, and we'll link all 3 of the county property websites in the description below. There are no HOAs here, just CDDs. You own the land that your home sits on, which means you are responsible for lawn care, house maintenance, and other utilities like electric, gas, cable, security, and internet.
Now, in addition to taxes, there is a monthly fee invoice where you pay for the amenity fee and specific basic utilities like water, sewer, irrigation, and sanitation collection. The amenity fee includes, of course, the use of the rec centers, most pools, executive golf courses, and other things, but not the indoor fit club. This invoice comes from your CDD.
You can find your invoice at www.districtgov.org.
That site has absolutely everything you need to know about the villages and has all other kinds of links. Most questions you have can be answered by searching this site. If you like this video, give us a thumbs up and comment below. Share with us any hidden costs you may have found.
If you found this video useful, please subscribe by clicking on our logo here and hit the notification bell so you never miss an episode. Please share our channel with a friend.
If you missed the first part of this series on house hunting, click here to watch those videos next.
Thanks for watching.
Catch you on the flip side.